What is going on, guys? Luke here today to explain why the heck this market isn't crashing and how to make sense of it all. But more importantly, I'll tell you if the market is going to crash at all and what I am doing personally to profit from it no matter what happens. So let's get started right now. Welcome back, everyone. In this video, we will cover the 3 reasons why the market hasn't crashed yet, my opinion on if the market will, crash at all, and how I plan to profit huge from it no matter what the market chooses to do. And if you are interested in exactly how I build real wealth using stocks, check out the first link down in the description. And like the video if you're wondering what the heck is going on with this market. It's just crazy out there. And liking the video is probably the only sure thing you can do. Now let's dive into this. The 3 reasons why the market hasn't crashed yet. The first reason, the incredible performance of a handful of companies. Look, the pandemic has exposed the companies ready for the future and those that are not. Look at Amazon. Despite the shutdown and everything else, one of the best quarters ever for them. I mean, ever. This isn't some growth company. This is an absolute behemoth of a company. And look at Apple. Again, one of their best quarters ever. And that stock was trading down because of the fear that their products were expensive and no one would buy them in a global pandemic scenario. And Apple proved their ecosystem is super strong, and instead of running to cheaper options, people actually doubled down on Apple products. And look at Tesla, turning a profit despite the other automakers losing billions with a B and having inventory stacked up all over the country. Tesla seems to sell everything they have and are aggressively expanding their other lines of business, not contracting like the rest of the auto industry is doing. Microsoft, again, massive profits. Even growth stocks like Square, who thought, would be hammered due to this pandemic and the fact they have so many small businesses that use their product, had an amazing quarter. Oh, and it wasn't just high-flying tech companies either. Incredible performance by Walmart, Home Depot, a whole bunch of others that all had incredible quarters. The problem? These companies basically have propped up the entire market, as most other stocks are really struggling right now. Let's just look at the S&P 500. Apple, Amazon, Facebook, Google, and Microsoft have performed incredible during this period, while the rest of the index has really lagged. And of course, those top 5 stocks are making up such a disproportionate amount of the index right now, like they make up 33% of the entire index. That is ridiculous when you think about it, meaning the other 495 stocks make up the rest. So even though it appears the market is doing well, the lopsided performance creates problems in the future, which we'll get to shortly. The second reason why the market hasn't crashed, the rise of the retail investor. Raise your hand. Oh, well, I can't actually see you, so you have to smash the like button instead. But do that if you have started investing on your own this year. Now, I'm not talking about investing in your 401k. I'm talking about trading on your own using Robinhood or Webull, which link in the description for 2 free stocks, whatever you use. My guess is it's a lot of you across the entire age spectrum, and it's fascinating and exciting to see so many new people jumping in and taking control. And how many of you guys' sell button is broke? Or if you sell, it's probably just to put it into a different stock or the same stock a few days later. The retail investor has had a monster impact on the overall market, especially since they tend to trade in herds overall. Obviously, it's not everyone. Slow down, don't blast me down in the comments. But look at the list of hot stocks on Robinhood, and you see those stocks go on huge runs, regardless of whether it's a bankrupt company like Hertz or a high flyer like Tesla. So retail investors are clearly moving the market and keeping the market from a crash. And the last reason? A little entity named the Federal Reserve. I know this has been debated endlessly. Should they have done what they did? Should they have just let the market function as it was? But there is no denying that the Federal Reserve is the #1 reason the stock market has not crashed. Every other economic indicator out there says recession. And there is no question the market was in free fall until the Fed announced they were going to spend an unlimited amount of money to keep the markets functioning. I mean, they just said free money for everyone and threw it out there. Throwing things like buying up corporate bonds and other fancy vehicles like that they have never done before, and it just basically created an environment where the safest place to put your money was in the stock market instead of your normal safety nets when times are bad. But unlike all the previous times when the Fed has bailed us out, we are in unprecedented times and trading has been bonkers to say the least. And I'm not sure the Fed's intention was to have the market run up like this. But this does set up unintended consequences for their actions. So what is my opinion on if the market will crash at all? I know there's a lot of different views on this, so I can only tell you my opinion on it and give you the why. In theory, the market should absolutely crash. Even bad companies are trading richly right now, and we can go over every metric like forward PE of virtually every index, and they are all at all-time highs or nearing all-time highs. And no, stop it right now. Saying the market is forward-looking is ridiculous at these levels. Yes, the market absolutely looks forward, but no, the market does not look 5 to 7 years forward. We are way past pricing in a perfect 2021 recovery or even a perfect 2022. So yes, the market is way overpriced, and a crash of some sort would not surprise me in the slightest, as that's what absolutely should happen. However, and this is a massive however, look at the reversal the Fed pulled off in March again. That is called having the cheat code on Nintendo with unlimited life, and then using it to change your luck in a game. Now, can the Fed continue that level of support continuously and the stock market continue to just go on the crazy run up infinitely forever? Nope, not at all. There's no way they can do it. And the Fed has stated repeatedly they want to provide a soft landing for the markets in the end. What the heck does that mean, you may ask? It means the Fed overdid their job early, but they also know they cannot pull the rug out from everyone all at once. And if the Fed does pull the rug, there is no doubt in my mind the market would crash almost immediately. It would be a disaster. But since we know now that the Fed wants a soft landing, they will continue to slowly manipulate and back away, but only at a pace that allows the market to trade sideways or even a little bit down. But it's kind of a slow bleed off like we saw in the 10 to 15% bleed off a few months ago before the earnings and the stock split mania that has just kicked in and sent the market into hyperdrive again. In order for the Fed to properly execute this strategy, it will take years, not months, but years to provide an actual soft landing. So seeing years of sideways trading or even downward trending trading will not surprise me, and is where I think it will go over the next 2 to 3 years at a minimum. How I plan to profit huge from it all. Now remember, this is my opinion and for entertainment purposes only. Do not listen to me. So there are basically 3 things I'm going to do to profit huge from all of this. The first, identify and have a strategy for buying those winners that fit your plan and your goals. This one should be relatively easy, and the winners have obviously stuck out in this market. So you just kind of need to figure out where you want to buy those stocks and how they fit in with your overall plan and strategy. And actually, I will be buying some of the current losers as well, who I think will be winners long term. Now, I do not like the price of a lot of these losers for now, kind of like Carnival Cruise Line, which is the first one that pops in my head. It's still a little frothy at the $14, $15, $16 range that it's in right now. But in my opinion, just my opinion for me, a price around $10 again would absolutely make me think about adding more, as I feel 2 to 3 years from now, they will be just fine and come out of this. Now, my winners are not going to be the same as yours, but I have identified my winners and have a strategy for adding each. The second thing, I have cash set aside to take advantage of opportunities. Now, how many of you all wish you would have plowed more money into the market back in March? I know I wish I would have put more in. I put some, but not nearly enough given what all has happened. Well, if the market corrects itself some again, you cannot take advantage of that opportunity if you don't have cash to invest in the first place. So with prices getting higher and deals getting a lot harder to find, I have been increasing my cash pool so that way I am ready when an opportunity does come up. And the third, have a plan for both a continued bull run, have a plan for years of stagnant growth like we just discussed earlier, and have a plan for a crash. The truth is, the people who got hammered in March were those who panicked, then sold off, and then FOMO'd and are now buying at all-time highs. That is exactly what you will do if you do not have a plan for every stock you own. I know exactly what I will do with every stock and every scenario. If the market drops, I will gladly execute my plans with confidence because I have a plan and my emotions are essentially eliminated from the scenario. Is it still scary to invest in a stock when it's beaten down? That may not turn around for 2 years or more? Yep, it sure is. Does it suck to see that money go down short term? Absolutely it does. But I know exactly what my long-term plan is. So a trade that goes down initially, barring a major scandal or something like that, I know does not define it as a good or a bad trade. It's kind of just like your team being down in the first quarter. It doesn't really mean a whole lot unless it's just a complete blowout. But I sleep very well knowing that I am prepared for whatever madness the market or the Fed throws at me. So there you have it. Identify the winners, have cash waiting, and have a defined plan for everything is what I am doing to profit from this madness. And if you don't know how to create a plan, set defined goals, even how to analyze a stock, check out the first link in the description where I will teach you my method for all those things. And show your support for the channel by, liking the video. And you can follow me on all the social medias I have so you can watch me epically fail on all of them. And don't forget to sign up for Webull and get your 2 free stocks when you deposit $100 with them. But I think it's going to be a crazy next few weeks. So make sure you are subscribed, which you can do right there, so you can get the truth on all the craziness. And here are a couple of videos I had about the stock splits for Tesla and Apple. Thanks.